Imagine a stock as a tiny bird, let's say a sparrow. If we watch a sparrow long enough, we start noticing patterns where it flies in different seasons, how the wind affects it, how it reacts to storms. From these observations, we can build a simple model of how the sparrow behaves. It won't be perfect, but it can help us guess what it might do next. Now take the same idea and apply it to the stock market. A stock also moves because of many forces: news, the economy, company performance, world events, and investor behavior. But here's the catch: birds follow nature's laws, stocks follow people, and people are unpredictable. Fear, greed, rumors, sudden news. A pattern can disappear the moment people believe they've found it. The universe is full of patterns, some stable, some slippery. Markets belong to the slippery ones.